Good afternoon, everybody. Today I'm joined with Martino De Ciccio from Montage Gold. Guys, we're really excited to have Martino on because the company is on the heels of a US $825 million financing package announcement involving Wheaton Precious Metals and Zijin Mining. The company did this financing for their Koné project in Côte d'Ivoire that is expected to produce 300,000 ounces of gold a year for the first 8 years of production. Guys, the smartest gold investors I know that play the equities market love companies that are at the last stages of development before going into production during a bull market. These are the names that the big tier companies tend to look at for M&A, and that usually means pretty good things for the stock price. Now, I'm not giving a buy recommendation. I'm not long. They're not a client or anything. We just thought that this is a name that we wanted to bring to you guys, our audience. All right, everybody, enjoy the interview. Martino, thanks so much for joining us today.
Well, it's a pleasure to be here. Thank you so much.
So you guys are one of the big stories right now in the gold world, off the heels of a pretty big financing announcement via Wheaton and Zijin. Now, before we get into the actual deal itself, I got to ask you here, you're clearly talking to the decision makers in the gold world. What's the conversation like right now?
There are lots of positives in the gold industry, and specifically around Montage, as there's not many projects out there at our stage of this size and with this potential. So overall, on the gold side, it's very interesting, and then Montage is in a sweet spot right now.
Were there lots of suitors that could do a deal like this one, or was it just a handful of companies that were sort of bidding for this deal?
It's been a very competitive funding process, and we knew it would be. I mean, if I backtrack, it took us over a year to look for assets in which we wanted to jump into and look to build. And then the Koné project fit all the right criteria. It's long mine life, sizable production, and robust returns in a country that we knew well. So going into Montage, the team and I that were at Endeavor for almost a decade knew that we'd have good success to fund and eventually to build it. We received offers across traditional lenders like banks, streamers, and of course other market participants as well. And finally, we're very pleased to have funded ourselves with what we consider to be two long-term partners with Wheaton and Zijin.
So maybe for our audience who are unfamiliar with the deal, and by the way, we actually have done a YouTube video breaking down the deal. Maybe you can give us a little bit of a high level overview of the deal, explaining to our audience the recent financing package that you guys put together. And actually, let's start with talking about the project itself, and then this financing package and breaking down the terms of it.
Excellent. Well, look, our project is a high quality project in Côte d'Ivoire. Côte d'Ivoire is one of the best jurisdictions in Africa in which to work in. The team has built four mines in the area in the last decade, two of which were in Côte d'Ivoire. The project itself has a 16-year mine life. The average production over the first 8 years is 300,000 ounces. First years are higher than that already, closer to 350,000 ounces, all in sustaining cost of roughly $1,000 per ounce. And in the current gold price environment, there's less than 2 year payback period and IRRs of over 50%. So very robust project on which to, and a good market in which to build an asset right now.
So you guys are working with two partners who have come in and put the big money to move this project forward. We have Wheaton, who did a streaming deal, and then we have Zijin on the other side. Can you break that down for us?
The most important for us was to look at a funding structure that maximized NPV per share. So that takes into account the cost of funding and the equity dilution. So we were very pleased to be able to put a funding structure in place that does not require lots of equity. The stream on the Wheaton side is a very unique stream in the sense that it's owned in the two known deposits. So we also have other features that are fairly unique in the sense that we can over deliver into the stream to effectively reduce the stream to nil. we can deliver ounces from outside the area of interest and credit those ounces. And in addition, we can participate in the gold price upside, given that the transfer pricing is based on a sliding scale. So as the gold price goes up, we get better gold transfer pricing. The Zijin stream is also a very unique uh, instrument because it's fully redeemable. So 100% redeemable and it's subordinated. So the fact that it's subordinated has allowed us to treat that as quasi-equity and therefore limit equity dilution.
Now, does the deal structure have any terms around it about your ability to produce outside of the area of interest?
Well, what's interesting here, and you've said it, it's doing a deal with partners, and it's in everyone's interest to be able to do exploration and feed the mill with the highest quality ounces that are going to generate the maximum return for our shareholders and, of course, for the lenders. So everyone is aligned, and there's no Montage has full flexibility to be able to modify the mine plan to maximize returns.
Now, we went through the terms of the Wheaton side of the arrangement, where from our math, Wheaton's able to purchase gold at give or take around a 17% value. Should gold be $1,500, 20% at $2,200, 20.5% at $3,000, and 22.9% at $4,000 based on the numbers that we've calculated. I'm curious because you guys also today just announced that you guys have effectively bought put options on gold at $2,500. Can you walk us through that?
Well, it's again a unique funding structure, as typically companies of our stage have restrictions on being able to just buy puts, specifically if they have funding that was done by a traditional lender, such as a bank, that would prefer a forward strategy. In our case, we like the put strategy because it offers significant financial and strategic flexibility. So we have the full gold price upside while retaining the 2,500 cap. So what we like with this instrument is the fact that in the first years, we need to deliver 19.5% of our production to Wheaton. So by being able to lock in healthy margins, $1,500 per ounce margins, because our costs are 1,000, it allows us to be able to generate good cash flows regardless of where the gold price will go, to be able to meet strategic objectives such as one, being able to over deliver into the Wheaton stream and therefore being able to deleverage ourselves more quickly, and two, to have sufficient cash being generated to put us in a position where we are able to exercise our right to be able to redeem the Zijin stream. So we see it as prudent capital allocation to be able to address our two strategic priorities once we're in production.
So, Martino, my assumption whenever I see a deal like this is that there's going to be certain investors that are looking at it and saying that you guys gave up too much upside. What would your response be to investors who bring up that concern?
Upside on the stream or on the put option?
On the company's ability to maximize returns for shareholders. That a lot of times investors, they look at these things and they think that these financing packages just magically exist where they can just go find unsecured debt and finance their operations through we'll just say standard bank financing, or that there's these magical deals out there that may exist. What would be your response if an investor said, hey,
Well, we need to be very careful of how we fund ourselves because the first project you fund dictates your cap structure for the next 10, 20, 30 years or so. So it was very important for us to be able to limit shareholder dilution on the first bill. When I take a look at our funding structure, we've been able to get Wheaton, which is low cost financing for us. If I look at other financing alternatives, there's a few key factors there that would have impacted the share dilution. So traditional debt, for example, you're accumulating interest for 2.5 years before starting to pay that off. So the starting position is that you need to effectively raise 80 to 100 million more just to fund the same project. So the important for us was not to give up exploration upside. So the only reason that we did this stream is because it's on the two known deposits where we retain the full exploration upside. So we have 50 targets on the property that we've identified in addition to the two deposits that we have.
So what you're saying here is that you guys are playing the long game here and you guys are trying to build a long-standing business.
Correct. I mean, we're trying to unlock value in the short term by looking at the optimal funding structure for Koné and being able to successfully build it. But we came into Montage with the idea of building a multi-asset gold mining company focused on Africa. So after the Koné project, our goal is to find the next project to build, and hopefully that comes through our own exploration success, where we're looking to add an exploration pipeline commencing in Côte d'Ivoire.
So what kind of development timeline are we looking at for the Koné project?
When we joined Montage, the goal was to launch construction in Q1 of next year, which was a very aggressive timeline, given that we didn't have permits in hand, nor funding, nor a team. But since then, we've been able to deliver on each of those points, and we're very pleased to be in a position where we can start early works later this year and formally launch construction in Q1 of next year. According to the study, it's a 27-month build, but we'll be looking to compress that to less than 2 years. So the goal is to be in production in the first half of 2027.
Okay, so last question for you, Martino. If I'm an investor watching or I have you guys on my watch list, I know that for a lot of investors, they're looking for those companies that are just near production because in a gold bull market, those seem to be the most attractive names. So I got you guys on my watch list. Now I'm saying, okay, what am I looking out for? What do I expect out of the company over the next year? What are those sort of goals or timelines I should be watching?
Well, first off, I mean, our motto internally is that yes, time is money, but time is also dilution, and that's what's been pushing us to go quick here. So we'll be looking to rapidly execute our growth plan in the coming 2 years with the launch of our Koné construction later this year and coming into production by first half of 2027. In the meantime, we'll be looking to add value through exploration. So we believe that you need to be committed, and accountable for the money you spend on the exploration front. And that's why roughly a month ago, we came out with a target of finding 1 million ounces at a grade that is 50% higher than the current reserve grade by the time we start production. So within the next 2 years or so, and that's expected to materially move our valuation. So we expect the re-rate to come for two key areas. One, the de-risking of the build, and two, the exploration success that we intend to find at Koné.
All right, well, Martino, thanks very much for hopping on here. We've been following your story, and we think that you guys are definitely a name that our audience wants to keep an eye on. And hopefully you'll keep coming back on here in the future as you guys continue to build your mine.
Excellent. Well, thank you for hosting us. It's always a pleasure to be on, and it's always exciting to be able to come back on with further updates.
Thanks, Martino.
Thank you.
All right, everybody, thank you for watching. If you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.